Hello everyone, hope you're doing well, hope you had a good weekend. Welcome to another episode of Monday Markets brought to you by the FTX app, the best mobile trading app experience and portfolio tracking available on the market. They give us money, so obviously you can't trust what I'm saying, but it's a good app, I truly believe that. Download it in the links in the description below, support them because they support the show. So Monday Markets, let's take a look at the state of the market. We've had the weekly close and there are kind of 10 days left until the monthly close as well. We can start on the monthly time frame. Not much has changed. The market is trading at or around previous cycle all-time high. There'll be more commentary to be had there on the weekly time frame. As for the monthly time frame to look constructive, the same three scenarios are in play. The first would be a reclaim of the range low at 35k, which seems like a lifetime away now, but that's still a relevant range low level whose reclaim would be significant. The other would be trading at monthly support closer to 14k, 12k, whatever it may be, which is basically the candlesticks of the prior cycle. And I guess the third case is the one Don has talked about at length, which is some form of consolidation between these levels, which will take probably weeks and months if it is the case. So if we start getting a new higher time frame kind of interim range form, we'll have plenty of time to dissect it, draw it out, and it just takes more candlesticks and more time. So that's the monthly time frame. The breakdown has had follow through. It's landed at sort of weekly support at 20k. Monthly candlestick support or structure, if you will, is at lower prices and the market's not there yet. And 35k reclaim still presents a good setup, albeit not immediately relevant for our purposes. What is relevant for our purposes is the weekly time frame. As mentioned, price is in an area of support. There are two structures which comprise this area of support. It's the prior cycle all-time high at around 20k. It's also a nice kind of psychological round number and whatnot. The other one, which is relevant for our purposes, is the 200-week moving average, which has historically, as we've discussed at length before, been a kind of floor for previous bear market sales, capitulation, whatever it may be. I know there's a BLX chart which has more price history. It's kind of been support in the past. I do want to look at the two most recent or previous instances. Which is the 6k breakdown. You can see you had a real acceleration into the level, and that's kind of where price stabilized before moving up significantly higher. There was, of course, the COVID crash, big liquidation, liquidity crunch, that whole thing. Despite the significant wicks to the downside, price stabilized there again. And you could see, although it did close below on the extreme week, the subsequent close above was roughly in line with when the trend reversal started, and we have the current instance in price. If we look at it, we have to kind of take the market at face value and only trade bullish setups when the bearish setups have failed. So if we look at this close at face value, it looks like price has broken the 200-week moving average on the closing basis, i.e. it closed below it, and that suggests another break of support, which isn't great. Now, as I've said, in general, at least for me, in my trading system, the best bullish setups are failed bearish setups. So when support breaks, you expect the market to go down. Instead, that broken support doesn't force the market lower, it gets reclaimed, and everyone who sold that support or entered fresh shorts on that signal ends up on the wrong side of the market, and them buying back, closing their shorts or buying back, all both turn into buying pressure, and that's when you get your momentum and or reversion to the upside. So what would that look like on the weekly time frame? It's kind of just the scenario that we discussed last week to some extent, where you'd need this bearish close to be nullified. And at its simplest, what this would look like is a weekly close back above the 200-week moving average, which is at around 22k or thereabouts. Should that happen, all this activity, all this selling, fresh positioning, existing positioning, whatever you want to call it, will be offside. And I think that would set up for a visible, meaningful reversion higher. And by visible and meaningful, I mean even just a few weeks of green candles. There has been absolutely zero relief in this entire downtrend. The closest we can point to is the bearish retest, this kind of green candle here. It hurts to even call it a green candle. And the only thing it was good for was a retest of broken support turn resistance before moving the market lower. So the market has essentially moved from 48k to 17, 18k with zero signs of relief, which is very rough. And that's also part of the reason why I'm not personally rushing to front run any of these setups, front run support, whatever it may be. So to summarize that, the weekly time frame is an area of support, as you can tell by it trading the 20k handle. The weekly close hasn't been terribly constructive because it closed below support, which at face value is bearish. If it is going to be bullish, then I think we need a weekly close above this level to mark this price action as a failed breakdown, and then we can aim for a reversion higher. What does it mean to have a reversion higher? What would the target for that be? I think to some extent it would require retracing much of the selling that took us here. A lot of this very one-sided, inefficient price action. On the weekly time frame, my eye is drawn towards, as far as it may seem, at least the previous range low, broken support turn resistance at 32k. Depending on what time frame you look, on the daily time frame, that same area can be delineated using the range low, where it's the same old pre-consolidation, pre-breakdown structure at 28k. So I think the TLDR version there is, if the weekly time frame sets up as a failed breakdown, that would A, suggest reversion to the upside, and B, the target for that reversion, I think if we're being conservative and reasonable, like it has to be some sort of visible bounce if the setup is going to be worth taking or have any legs. And for me, that area aligns anywhere between 28 and 32k. Crypto in general has a tendency to overshoot support, overshoot resistance, do all that type of stuff. But in terms of the structure that's in front of us, I think that's a decent target if we get a counter trend bounce for a change. If that setup doesn't happen and there's no failed breakdown or failed bearish setup, and it's just the fact that we've closed below support and we're going to move lower, the considerations outlined on the monthly time frame still apply. The monthly support is at around 14k. Expecting a wick there is reasonable, and we can look at where the candle structure is on the weekly time frame, which is closer to kind of 12k or thereabouts. And basically, the next target would be the higher time frame shelf. 10, 12, 14k doesn't make much of a difference. At that point, we're taking kind of existential longs on crypto. At least that's going to be my frame of mind should we get there. I hope that's straightforward enough for BTC. At face value, support is broken. If it's not, I expect that to be the first trigger of meaningful reversion to the upside. If it's going to be like the other breakdowns, which have essentially all played out and continued to move lower, then we would finally hit monthly support and significantly discounted levels at 11, 12, 13, 14, or thereabouts. So the close below support sucks, but it can very quickly unsuck if that breakdown fails. So that's kind of what's on my radar for this coming week. Is this a real move and close below the 200-week moving average, or is it a trap? And I think this week's price action will mostly answer that question, or at least the next week or two of price action will mostly answer that question. And if it is a trap, I think there's plenty of space on BTC for a reversion, and altcoins I expect to follow, and there's going to be some decent counter trend opportunities should that align. One final note on this weekly close. A lot of the selling took place over the weekend, which are generally kind of lower liquidity periods. And so that kind of indicates that there was a lot of forced selling and deleveraging and urgent, sloppy selling going on to kind of nuke it into the weekly close over the weekend. As you know, when liquidity is thinner and books are thinner, market orders, even if they're the same size as they would be, say, during the week, have a larger impact on price. So low liquidity plus market order / big size equals big displacements in price. So that kind of weekend fuckery may have tainted this weekly close a little bit, but I still want it to reclaim the level. And even if I'm slightly late to the entry, like let's say, it's probably not going to close perfectly above the level. If it is bullish, if it closed at 23, 24, 25, whatever that may be, I still think there's enough fuel on the failed breakdown to make that trade worth taking to the upside. So that's kind of it for BTC USD. I hope that makes sense. Leave a comment if it did or if it didn't. I'll try to clarify. ETH USD, very much in a similar boat, which is to say that price is trading at prior cycles highs / support at 1K. Same old round number confluence relevant there as well. And that's kind of monthly support for the time being, right? And I do want to see a monthly close above this structure to support the idea that this is just kind of a very extended range high retest. In terms of what we have to deal with shorter term, same consideration I think applies for the 200-week moving average. It looks like it's closed below it, which isn't great. It would look much better if it reclaims, and that all of this sub 1,000 selling would look like a failed breakdown. And in that case, I think you've got a very reasonable reversion target back at, I think, closer to 2,000 is the first area I've got. Maybe the prior cycle's all-time high at 1,400 is kind of an intermediate resistance. But that's sort of, those are the two areas which would be relevant to me. Nothing too special going on the daily time frame. It's very much the same as BTC. Area of higher time frame support, 200-week moving average broken. That's not great. If it keeps nuking as a result of that break, and we take it at face value that support is lost, I think similar to BTC, the very discounted monthly levels, it's this pre-bear market range between basically 700 and 400. That will be the kind of existential panic longs target for any type of breakdown. If the breakdown fails, that will be evidenced by a reclaim of the 200-week moving average, and I'd be targeting at least prior cycles all-time high at 1,400. More optimistically, if we get a much meatier reversion and more fuel, maybe some more fuel from legacy looking decent, whatever it may be, I think the more visible reversion target would land at around 2k. So same story, monthly support, weekly close, kind of garbage. If the weekly close becomes not garbage, I think that would be really the first decent sign in all this time that we can get some reversion. So that's kind of what my focus is on for the time being. I'm not positioning ahead of that or for that in advance. I'd rather pay up for the entry, and I will take a worse price if it means kind of a higher probability of playing out or more quote-unquote confirmation, if you want to call it that. Altcoins, I think I can keep it very simple and honest here. If I get the 200-week bullish reclaims on BTC and ETH, you don't need to think too hard about the specific technical setups on altcoins. If BTC and ETH rally and form a failed breakdown and give you that counter trend bounce, I expect alts to just behave as beta and follow along. Specifically, AVAX and Solana, probably Solana more than anything else, given relative strength to BTC. I basically mirror Don's analysis on this, which would be any target for a visible bounce would almost have to be the range high closer to 50. And then if things get really freaky and reversionary, it's his previous broken support turn resistance at 70 to 80. It looks far away. It is far away. It'd be more of a 2x, but at this point, the prices are so depressed that 2x when something's down 80, 90% isn't that special, especially in kind of a low liquidity environment where the market's much easier to push around. So the TLDR on altcoins, to be honest, is if you get bullish setups on BTC and ETH, it kind of almost doesn't matter which altcoin you choose. There's a good chance they'll play catch up and go along with it. If you want to be more specific in your filtering process, you could look at alt BTC or alt ETH pairs to see what's been showing relative strength, or just bid the names you like, bid the names you know, and look at the technical structures they have to see if they give you any attractive reversion targets. As far as equities go, not really much home to write about. The S&P is within this. It's not the best support, but it's still monthly support. This cluster at 3,700, like 3,710, 3,760. There seems to be some absorption going on, but again, it's kind of a holiday weekend type of thing, and definitely need to see more price action there. It's in an area of support, but the macro or higher timeframes still don't look fantastic, to be clear. And I think similar considerations apply to the Nasdaq. If we look at this monthly timeframe, it's same old story, right? Doesn't look amazing, but it's close enough to an area of monthly support. For me, it's this cluster between 11.1, 12.1, especially because it's trading or traded around the lower boundary. So something worth bearing in mind there. Decent reaction, but it's early days. As far as the market more broadly, bigger picture stuff, do read my tweet about the state of the market and a kind of summary of what we've been through. I still think macro will set the macro bottom, which is to say, inflation, the tightening cycle, geopolitics, all of that type of stuff, I think is still very much in the driver's seat and still very relevant. But that's not to say there won't be any reversionary moves or counter trend bounces in crypto. If the two both can be true at the same time, that macro can suck and crypto can bounce. Just I'm not expecting a new trend if it does bounce, as more a counter trend move. And those setups haven't triggered yet. I'm being slightly patient and waiting for evidence of a failed breakdown. And I know that approach sounds boring. I get trolled a fair bit saying, "Oh, Cred, do you even trade, etc." I'd love to trade, especially if the market were to give me something tradable or one of my setups on the long side, but it just hasn't been the case, right? So, for example, this rally into previous support turn resistance and a bunch of the reversion targets in the mid-40s with the Luna Foundation guard buying, that didn't reclaim that monthly macro mid-range we talked about, so I couldn't long it. Price went down. Then price reached and closed below weekly support at 32k. As you'll recall, I was waiting to long this, and my precondition for longing it, and this is relevant on the monthly time frame as well, would be a reclaim of weekly support. It didn't happen. Price went lower, and that's kind of been the story. And now we are in an area of high time frame monthly and weekly support. We closed below. All I'm asking for is, for once, show me evidence that the breakdown isn't going to fail. In this case, that would be a reclaim of the 200-week moving average, and I can finally take a long. But it's just quite a bizarre set of circumstances where I have to defend the fact that I've been passive, even though it means I haven't been getting wrecked. I'm just waiting for some sort of evidence that a market which has been going down for 10, 11 weeks straight is going to absorb a breakdown for a change. I think if we get that evidence, it'll come in the next 1 or 3 weeks. And I think one of the best proxies or signals will be a reclaim of the 200-week moving average, and all the selling here would act as fuel to the upside. So I'm still waiting for that. That's my focus over the next 1 to 3 weeks. If it doesn't materialize, and as I said, we've got monthly targets to, I guess, look forward to in a very twisted way. And at those prices, those are just kind of is crypto going to stay alive, or is it a failed experiment type of thing? So that's where I'll be punting no matter what the confirmation. That's all from me. Hope this is helpful. Leave a smiley face or a sad face if you want. I always love to read the comments. Your support on the channel has been great. Like, subscribe, do all the YouTube stuff, and have an excellent week. We'll talk to you soon. Newsletter will probably come out later this week, maybe like a Wednesday or a Thursday, because I'll be in NFT NYC seeing what the Bored Apes and other JPEG connoisseurs are up to. But Technical Roundup will always be here to, I guess, tell you how it is, talk our book, and try to be somewhat rational and reasonable. Thank you for your support. That's all from us. Let me know if you have any questions. I'll try to answer them. Take care, and final thank you to FTX app for supporting the show. Track your portfolio, hide your portfolio, buy altcoins, get your family members into trouble in the digital Ponzi's. All that stuff is available via the links in the description below. Thank you. Take care. Goodbye.